So I would like to welcome everyone to this panel that is going to focus on ship finance. Ship finance access to capital is one of the most critical topics. And, with shipping being a capital intensive industry, this is one of the backbones of the industry. And we will discuss about traditional bank finance, bank lending, alternative finance. I'd like to thank John Imhof from Vedder for being with us and moderating this panel, Shreyas from Citi, Philipp from Berenberg, Evan from CIT, Nino from Hayfin, and Christos from DNB. Without any further delay, thank you to everybody. And John, the floor is yours.
Yeah, I'm John Imhof. I'm a shareholder and a member of the Global Transportation Finance team at Vedder in New York. It's a law firm that has offices in the United States, London, and Singapore. I had planned to allow each of the panelists to sort of introduce themselves. Maybe we can spend a little time doing that. Shreyas, you're first alphabetically, so tell us a little bit about you. All of you are well known, and all of you know all of your institutions are very well known, but I thought it'd be nice to allow people hear directly from you. So Shreyas, please tell us a little bit about what you do at Citi.
Thanks, John. Well, thank you. Thank you for this opportunity. I'm the global head of the shipping business at Citi. I took the job over from Michael Parker about 18 months ago. And bam, right into the COVID crisis, which luckily for us didn't turn out to be that bad for shipping. Citi has its roots actually in the shipping world, as it was created 200 plus years ago as a shipping bank, actually, by a bunch of New York traders who wanted to have a shipping line between New York and Liverpool. And not many people know that. It was called the Black Ball Line, and it was one of the first line of services in the world. And in the modern era, last 50, 60 years, Citi has been very active in shipping. And today we are nowhere near the top in terms of lending, but we have a global machine that serves clients around the world. And it's with great pleasure that I'm here to talk to you today. Thank you.
Thank you. Evan, please tell us about CIT and your job there.
Thanks, John. For the past 2.5 years, I've led the CIT Maritime lending business. Before that, for my sins, I spent 2.5 decades working for ship owners, for DVB and some other finance institutions. The past 2.5 years, we've reestablished CIT with a solid senior lending platform for the maritime business. We have a good team put together. We've done about $1 billion worth of loans the past 2.5 years. So we're very pleased with how the business is progressing.
Great. Nino, please tell us a little, you're coming at this panel from a slightly different perspective. Tell us about yourself and Hayfin Capital.
Yeah, I think that's right. So Hayfin is a credit platform or credit fund based in London. We have north of $20 billion assets under management. It's a generalist shop, but there are 2 dedicated industry-specific teams within Hayfin, one of which is on the healthcare side of things, and then the other is the shipping desk. And from the shipping team, we've invested more than $2.5 billion into the industry across the capital structure. So many of us will wear different hats on a day-to-day basis, both from direct first lien secured lending, bank replacement type capital is what we would refer to it as, and then also outright vessel ownership on a standalone equity basis, where today we also, through different more opportunistic sleeves of capital, own north of 40 vessels. So definitely coming at this from a slightly different perspective, but the backbone is very much direct lending on a senior secured basis. And through that lens, we have worked with many of the other participants on the panel today and most all of the mainstream active ship finance institutions out there. So it's a pleasure to be a part of the panel.
Thank you, Nino. Christos, everyone knows DNB. Tell us about what DNB is doing these days and what your role is.
Thank you, John. I have been heading the shipping group globally for DNB for the last 4 years. I was running Asia for the bank before that, and I was running our business in Greece even before that. Everyone knows DNB. I mean, our presence in shipping has been, well recorded, the past decades. Mainly on the lending side. We are also extremely active on the capital market side, advising across the capital structure. What we have been up to, I mean, it is ship financing and shipping in general is changing in very fundamental ways, and I'm sure we're going to touch upon it during the panel. But we have been very busy trying to figure out how our business gets disrupted, how it changes, what role do financial institutions play in energy transition. So it's been busy times for banks and for us in particular.
Great, thank you. And Philipp, please tell us about Berenberg. Of course, people know Berenberg, but go ahead and tell us your role.
Yeah, thank you. Hi, everybody. 20 years in shipping, survived a big shipping crisis of a decade, and 6 years with Berenberg now, responsible for the shipping business there. As you know, Berenberg is probably 250 years in shipping, and we are a shipping bank today with roughly 30 people working for the team, very dedicated to the industry, and positioning ourselves between being a bank, a shipping bank servicing clients all over the world in banking, and the other side being a kind of asset management service for investors who are interested to see shipping debt as an alternative asset class. So positioning ourselves probably a bit between the more traditional banks here on the panel and what Nino just mentioned, and happy to discuss this further with you.
Now, let's just get right into it, because I think one of the big questions raised by both Christos and Philipp, you touched on this. Philipp, shipping has been through some changes. What is the current state of shipping and shipping finance these days? What sectors look good? Where are the challenges? Where are we in the bigger macro cycle? Go ahead, Philipp.
Yeah, so thank you. I think it's an interesting question at this point in time, because at least how we see it, we come out of a decade of debt restructuring, as everybody knows, with a lot of very bad headlines, and this has turned. And I think last year has been a kind of proof of concept year, as I think basically the ship finance went fairly well through the pandemic so far. Haven't seen too much negative headlines on that. And also for us, I can say all healthy, all solid. And so I think the sentiment has changed a bit. We produce not negative headlines, but it's a kind of normalization. So there are much fewer players today for the traditional ship finance, and there are new players like Hayfin and Australis, Meerbaum and others coming into the game, the Asian leasing houses. So everybody knows the whole landscape has changed a bit, but all over we see, or we foresee, a period where we can all see, let's say, a decent market for ship finance, where on the one hand you have relatively conservative structures still, a good return profile, at the same time with the markets as they are, let's say positive background from the industry. So interesting times, at least.
Anybody have any thoughts on that? I mean, is Philipp right?
Yeah, I think Philipp's right. I think I'd just add to that. I think we are at a seminal moment in the evolution of the maritime finance space. If you look at what needs to happen, if you embrace ESG, right? We're going to talk about this later, I guess, in more detail, but if you embrace ESG and you realize the challenge that stands in front of us, in how much you need to get done in a very short period of time, then there is a definite significant amount of pressure on the maritime community to renew its fleet or to retrofit its fleet. And the money has to come from somewhere to do that. So I'm actually quite optimistic about the next 10 years as to how our industry will evolve to meet those challenges, whether it's getting money from the capital markets or evolving new ways of financing. It's all waiting for us.
Shreyas, I'm going to come back to that topic. Hopefully we have time to explore a little bit more what's coming down the road for shipping finance. Does anybody else have any comments on where we are?
Yeah.
And, go ahead.
Yeah, I think Shreyas put it very nicely. I mean, shipping is ship financing is an ever-changing landscape. Cyclicality is one thing, and we are all used to that, and we can navigate it with various degrees of success, but we are all standing, so we've done a decent job at that. But we have been thrown a lot of new challenges in recent years. We have the regulatory challenges, which again, it's something that is very well within our training and the level of competence. But what we see now as a big trend is ESG. And what we are being asked to assess with ESG is technology risk, is execution risk, is performance risk, which are things that fall outside the traditional scope of banks. So we are all forcing ourselves to educate very quickly. There is going to be tremendous demand for capital in order to support the energy transition, and we need to be there. We need to be there in a responsible way, and we need to be there, with a credit hat as well to make sure we make it happen. So a lot of homework for us in the recent months and weeks, I would say.
And I suppose, Christos, isn't that why it might be fair to say that this is an industry, a market, a sector where, from a financing, from a lending perspective, you can still actually drive some pretty attractive risk-adjusted returns on a first lien basis as a lender? Meaning, if you compare bank finance, plain vanilla ship finance to the broader credit markets, I think that you're experiencing in broader credit markets a race to the bottom, incredibly tight spreads, loose covenants, PIK toggles. Whereas when you look at shipping, I think it's fair to say that the barrier to entry, both from an owner perspective and a lending perspective, from technology, from the challenges that we're faced with, from, as Philipp mentioned, the decade that we've all been through, and who's left standing, and the bulge bracket banks like yourself, like Citi, focused on maybe the more blue chip oriented corporates out there, juxtaposed with maybe CIT and Berenberg. Nicholas always does a good job of pulling together the different perspectives of the panels. And that's exactly why you're still able in this market to carve out your own space and drive those risk adjusted returns. I don't think it's the same with many other hard asset industries, and certainly not in the broader credit markets.
I agree, and I disagree with that. I mean, I think, with the regulatory pressure that, we are all facing, it's extremely difficult to make a good return on, plain vanilla senior debt. There is, especially for the, blue chip names, as you call them, it's very, very hard. Fortunately, shipping companies are transforming, though. Their needs are changing. They're becoming much more sophisticated. They access different pockets of capital. They need advice on a number of fronts. And I think if you have a business model that combines lending or can provide lending to enable capital markets transaction or to facilitate capital market transactions, then you can have a sustainable business model. You can help your clients differentiate themselves, and you can make a return that justifies the risks that you make. But if you look at lending solely by itself, it's a tough nut to crack with all the regulations which are creeping up on the business.
I'd like to move on to different topics, but I think we've covered a lot of questions that I had. I'd be curious to hear how, who do you think your competition is these days, and how do you distinguish yourself from that competition and from each other? Evan, do you want to take that one? You're on mute, Evan.
The competition has turned off the mics.
It's interesting. I don't find lending, okay, we'll have the challenges, but I don't find lending today especially challenging. Why? We all have to convince our credit committees, our investors, is it the right time to put capital to work? We're at a time where we've come through 10 a poor decade. We're now at the bottom half of the value curve. So values for these standard assets, at least, are attractive. The new building books are not through the roof. So there is good business to do as a senior lender. Now, the other good news is aren't that many players. Okay, if you ignore the race to the bottom, as Shreyas implied, and you talk about the people who can provide the senior debt, the 50 to 60% senior debt, a Berenberg, a CIT, Hamburg Commercial Bank, a Macquarie. Yes, there's a dozen. We work with all of them. So we work with everybody on this panel. We work with our fellow senior lenders because there is some lack of capital out there. So it's a good market.
Anybody
Well,
have
I would.
Go ahead.
I agree on that absolutely, and I think the challenge we see here is, and I think this is maybe for the bigger institutions, but for all of us in the end, to get this transfer to the next generation of vessels, to the new technologies done, and to get it right. Yeah, I think to finance secondhand vessels for now is very attractive from many points. We mentioned that already. At the same time, we all feel, be it from the regulator, but even more maybe from the investor side, and I would guess that the US will pick up in this respect. We will see pressure coming up on that and forcing us into justifying financing secondhand tonnage, which we think is still something which is valid and important, because it's still, for the time being and for the next 5 to 10 years, it's critical infrastructure. So we should finance it. At the same time, the regulator pushes into the next generation. So I think this challenge will be for all of us. Otherwise, I agree with Evan.
Well, where does the panel see, what does the panel see as the biggest challenge? And we touched on it a little bit. Biggest challenge and biggest opportunity for shipping in the near term. I mean, we've talked about ESG. There's going to have to be a lot of change in shipping, and that will certainly affect financing. But there are other things out there as well. I'm curious what you think. Shreyas, please tell us what you think.
Thanks, John. Well, for the shipping finance, specific shipping finance community, I think the biggest challenge is going to be where to find the capital to fund the energy transition. And in that, I don't include the new assets that the maritime world will develop as we go down that path. I'm talking about just the stuff that's on the water. And I think Philipp's point was very well made, which is that, if you're going to finance, if you want to finance older ships because it makes sense to do so, but your regulator disagrees with you, I think you have a fundamental problem on how we're going to distribute your capital. And of course, Evan and Nino can come and solve that problem a little bit maybe more freely than we can. But that is the core challenge. I think the number of banks has shrunk. Thank goodness, the rise of the alternative lenders has happened. That's great. But I think overall the pie is still small in terms of how much capital is available to shipping. And I think shipping itself is a very small part of big banks' overall portfolio. So as important as shipping is to the world in terms of what it does for the global economy, I don't think it earns the respect and the attention it deserves commensurate to that.
Anyone else have? I mean, we have a big fuel transition coming up, and that how is finance going to have to adapt to deal with that? I mean, I think we spoke about it, Shreyas, before with the retrofitting, and you just mentioned new buildings that will come in that are more sustainable. But anybody else have any thoughts about the big changes that are coming to the industry and the effect that's going to have on finance?
Maybe I can chip in here. I mean, everybody knows that shipping is the most efficient or energy efficient way of transporting goods from one point to the other. I think that is undisputed. The problem that shipping has is, in this ESG conscious society that we live in, and for a very good reason, you look at pictures of how ships get scrapped. You look at, the exhaust coming out of a funnel, and all of a sudden it's a dirty industry, and investors or shareholders do not want to put capital in it. I think the very big challenge for us is to show that we are very active in the energy transition, that the industry takes this extremely seriously. And I see, especially from some of the bigger companies, very, very responsible behavior about the position they want to take in energy transition, the way they approach scrapping, and this makes it much easier for banks like ourselves to also make capital available for these players. That is extremely important, and it has to do with the image of the industry, but also with the reality that we are facing now. How is the capital going to be raised? We are talking about a lot of money that needs to come for retrofits, a lot of money that needs to come for new technologies. I think there needs to be collaboration across stakeholders here. I don't think you can have a senior bank coming in like it used to in the past, 70% financing. I finance the first methanol or ammonia around VLCC. Next, there has to be contribution from a number of players, be it the yards, be it the charters, be it the owners, to make sure that the risk is spread appropriately and structured in a right way. So this is where I see the challenge for banks and for financing and shipping going forward.
Okay. Anybody have any other thoughts on that?
I think that's exactly right. And I suppose when you think through it, it really is in many ways the responsibility of the end users and the charterers to step up to the plate and absorb a big part of the responsibility to provide the necessary economic incentives around that new technology. I mean, obviously the new vessels and the new technology that's needed are going to be incredibly competitive relative to the older tonnage on the water. But as a function of that, they're also going to be more costly, and capital needs to be rewarded appropriately. And as a function of that, you're going to need some form of longer offtake contracts. I suppose you could draw a parallel with the burgeoning phases of the LNG market that has now evolved to a more shorter term spot, albeit still evolving market. To provide the logical incentives for owners to put the capital at risk, and it's a self-fulfilling prophecy in that respect. Otherwise, then you're just basically stepping back and saying that it all becomes speculative.
Yeah. Mm-hmm. So as you mentioned, one of you mentioned the shipyards. You're talking vendor financing in that sort of situation, and probably state-backed vendor financing. Yes. Okay. Yeah.
It's not necessarily, it's not vendor financing alone. It's potentially export credit financing. When it comes to nations that are shipbuilding nations, they have the know-how. There just needs to be pulling from all directions to really make this happen, because the cost is high, the technology is uncertain, the risks are different to what we are used to assessing day to day. So it has to be a collaborative effort for sure.
Mm. What has been the impact of COVID on shipping? In the beginning, I recall that there was a lot of ships being turned away from U.S. ports because there wasn't enough infrastructure or people at the ports to handle it. But that seems to have gone away. And what I'm now hearing about is an expansion in the demand for containers and container ships. Do you see anything else coming from COVID, or as it hopefully goes away, or has the industry learned anything from that?
I think, as I pointed out, it is still this proof of concept which I think needed for a while. And I think you mentioned the container market. It's a good example for something which went right last year. And for the first time since very long, the industry showed a very disciplined approach to a problem. And the answer of the container industry, the liner industry, was right to be disciplined on capacity and many other things. So what we see as a result today is that companies like Hapag or Maersk are publishing tremendous results, and we hear very good things, and new cash comes into the industry. Capital basically comes into the industry through the liners, and they are now able to disperse this capital, allocated further into the charter temp owners and the other areas to invest into new technologies. We have seen some announcements from Maersk and others. So I think this is something where we have a very positive example, which COVID produced in a way. And we see that this is also turning to be taken by the investors side. So the community is looking at shipping, and the sentiment, at least how we see it, and we talk to investors every day, this is something they have noticed. And in comparison to other industries, shipping did better this time.
Sure.
I also find it very interesting, the reminder of back to basics. So all of a sudden you're reminded of how well owners are positioned for a dry dock, or if they planned ahead enough. If they can't move their crew on or off, when are they going to be able to do the next dry dock? And are the bankers on your team prepared for that? If you're relying on a sale of an asset or purchase of an asset to make a transaction happen, well, if that gets delayed 6 months because of COVID, you can't move crew, are you prepared for that? So it was a nice reminder, and it was good to see how the lending teams and the owner teams worked on that. But that was a nice surprise.
It's interesting, isn't it, John? I mean, look, I think what COVID has done is that for the first time in a long time, we can all actually kind of agree that there is a lot of pent-up demand for things and experiences in the world. So people are projecting growth. At the same time, the order book is very low. There is a lot of supply-demand, let's say, strength, control of capacity in the shipping lines. So all of this put together should tell you that the next few years should be very positive for shipping, generally, right?
It's also about policy, right? I mean, it's also about, I mean, if you compare it to Lehman Brothers 2009, that was a financial crisis that needed policy driven around stability. And in large part, that policy sat on the balance sheets of large banks and benefited the wealthy and the asset owners. This has been a social crisis that required and requires policy focused on financial need, targeted to arguably the lower income households that are more likely to consume that policy, fueling commodity demand, finished good demand, et cetera, et cetera. That's a big part of it. And what we've seen from, in many ways, the US government and various European governments through COVID.
Yeah, it was a crisis of the individual, not the industrial. You know, that was the difference.
Yep.
What, thinking beyond the near term, what do you see for shipping and shipping finance? Let's start with shipping in particular. Shreyas, you had some interesting observations and ideas when we spoke earlier. Tell us what you think, where you think we'll be 30, 40 years from now in shipping.
Well, we're going to be challenged within the next 5 years, I think, to come up with solutions in the financing space for assets that none of us can even dream of right now. You know, if somebody wanted to turn a drill ship into a geothermal power producer offshore, you know, Scotland, do you think anybody's going to finance that? I don't think so. I don't think we have the tools. And it took us about 30 years to get those tools in place in shipping, where you got used to the charter construct, you got used to liquidity, you got used to secure financing, you got used to the off-taker, you got used to the yard skills. We don't have the luxury of that much time this time with new energy assets. The energy transition is going to come at us like a freight train, and we all have to be ready to find ways to solve it. So my view is that without government support, without 100% wraps from ECAs around the world, whoever wants to build energy transition assets, it won't get done, because we just don't have the tools within the banking community to assess those kinds of risks. I'm happy to hear a debate on that.
What about the finance industry? I mean, what are the challenges or threats and opportunities there? So we have one question about the digitization of shipping finance. How will digitization impact shipping finance if shipping assets are made more liquid? Will lending appetite change?
I think digitalization is definitely a disruption, but we have much more pressing issues that we have to deal with, straight away. And Shreyas touched upon it. I think we need to figure out, what happens with stranded asset risk across traditional asset classes that we have all been very comfortable financing in the past. What value do we put? How do we exit? How long does it take? This is a very burning issue that we need to answer. New technologies, yes, this is, and I think Shreyas hit the nail on the head. Things are moving very, very fast. It's tremendous momentum, and we are asked to come up with answers, overnight to questions that we haven't even thought of. About risks that we have not, as I said before, we have not traditionally assessed. Technology, understanding the technologies, understanding availability of fuel, understanding the logistics around the business. So it's a lot of factors that are transforming the industry. When it comes to digitalization, just so that I'm not avoiding the question, I think it's definitely a disruption. The challenge with shipping is that most of the facilities are extremely custom made, depending on the employment, the type of the ship, the credit risk of the owner. It's not a cookie cutter type of business. So while I don't think that this is a barrier, which means it will never be disrupted, I think it will take some time because of the peculiarities of each transaction in the industry. That's my feel on the digital threat. But the stranded asset risks, the new technologies, these are imminent issues we need to consider and find solutions for.
Maybe one point to add on that with regard to small, medium-sized owners, but also with regard to ship finance for those owners, which we still think is part of important part of the industry, at least for now, facing a lot of challenges, obviously, with ESG and so on going forward. But still, this industry lives off these small and medium-sized owners. And in order to serve those owners in the future as a bank, we need to standardize certain things. And so I would say there is a healthy competition, not competition maybe, but healthy startup culture with regard to digitalization of credit processes and offering lending through intelligent tools today. This has not been in the market successfully positioned, but I think, and sorry to say for those who had the ideas, but I think we as traditional banks will take these ideas and integrate it in our processes and become more digitalized, and that might help for still providing smaller volume loans, for example, in a flexible but relatively fast and standardized way. So it can help the industry in that respect. That's one aspect, obviously, only, but one to mention maybe here.
John, I think Philipp's right, but I think that must be a question from a ship owner looking how to get his banks or senior lenders more efficient. And it will make it more efficient for the small and medium-sized owners, but the core issue is there's not enough senior debt capital out there. Now the question is the capital going to come from banks like Citi or Berenberg, or is it going to be coming from debt platforms like Hayfin? I suspect if I was starting fresh, I would go form a debt platform and not a new bank, just because of the regulations my colleagues were talking about. So I think that'll be the solution to what the owner was driving at.
John, you're on mute.
We get to hear it twice. You're on mute.
John.
You're on mute, John.
I shouldn't mute myself. One member in the audience asked, where do you think about tankers are going, given the context of transitioning away from the eventual transition away from petroleum-based fuels?
I don't think they're going anywhere. I don't think we're going to get away from tankers. Maybe there'll be fewer tankers. Maybe the routes will change. Maybe the price at which oil is sold changes, but the amount of oil certainly will go down. but we're not going to go to zero anytime in the next 2-3 generations. So we still have tanker business.
And
I mean, in the short term, there should be, good given the order book and given the supply and demand dynamics, there should be very good market for tankers. More in the medium term, as oil becomes less popular or it's substituted, it's a bigger challenge and a bigger problem to solve. But I don't think the asset class is disappearing anytime soon, for sure.
Another question coming in. We've seen geographically finance move around the globe. Most recently, with the entrance of the Chinese banks and Chinese leasing companies. Do you think they'll continue to grow? Will finance move to other areas, India perhaps, or where do you see the next big ship finance center?
I suppose I'll weigh in. I'm not sure if I'm going to answer that question directly. I don't know where the next ship finance center is, but maybe just response to Philipp and Evan, that I maybe view it slightly differently, and fairly so, because my cost of capital is different, my product offering is different. We're not a bank, but I think it's ruthlessly competitive out there from a lender's perspective. I think that there's arguably more than enough first lien debt out there to go around for the right projects. I think that if you look back the last 10, 20 years, ship owners had a fabulous ride with banks absorbing a disproportionate share of the risk strip and not getting paid for it. And I think that today, when you look at the environment, the dust seems to have settled, and we're in an environment where actually lenders are able to, again, coming back to my earlier comment, drive pretty sensible risk-adjusted returns for an industry that is uncertain. And I think that when you look at the markets today, they're very well positioned. All of the uncertainty we talked around about technology, propulsion, ESG, regulatory frameworks, bank regulatory capital constraints, that's been fabulous for the industry and where we sit today when you look at markets and how we've emerged from COVID. And I think that things are setting up for a very interesting decade. I think that the comment's been made that people see opportunity, that people are positive, both from an equity and from a debt side, and that will only result in one thing, which is it will attract institutional capital, it will grow platforms, consolidation will hopefully cease to become a buzzword and morph into some form of reality. Philipp, you talked about the marginal ship owner who in many respects is slipping through the cracks. I think that they will always play a role. Having said that, I think the burden and the complexity of this industry, as has already been talked about, is only increasing. And it needs to, simply because of the challenges that lie ahead. So I didn't really answer your question, John, I apologize. But I don't...
Thoughts on what Nino just said?
No, actually, I'm going to answer your question, John. I think the future of ship finance is online. That's, I don't know if it's a geography, but I think it's online. And I think we are maybe a couple of years, 3 years away from a crowd-funded ship. All you need is a lawyer, a security agent, and a regulated website, and off you go, right? I mean, it's going to happen at some point. Maybe other asset classes before ships, but it's certainly the writing on the wall in terms of how technology is evolving and how we are becoming more standardized. And to Philipp's point, more modular, right? More standardized elements within ship finance. And I hope we do it because we need new capital. We need new people to lend.
Are you talking a retail investor or making crowdfunding?
Potentially retail, yeah, potentially retail investors.
So the world is ready for individuals making parts of shipping loans.
Yeah, look what Reddit did to GME.
Yeah. Anybody else have anything on that topic? What about governments? I mean, there's always been some discussion about more ECA financing, that providing an important part of the capital stack. Do you see a bigger role or a smaller role for government in ship finance?
I think that's, at least for Europe, there's no big, let's say, political support for putting big time subsidies, money, capital at work from the government side into the shipping industry, which is still a remote industry which you cannot touch on and where you don't get your election won. Yeah. So I think still it remains a very important question for the Western world, so to say, to answer that question right, because we need that support probably in the industry for getting the transfer of technologies. But at the same time, it's also a competition of areas. Yeah. So we see a regional competition with Asian capital being subsidized dramatically. And we have to answer that question whether we want to accept that. I mean the Western world in a way. To an extent, this is an unanswered question. And I hope, like Nino put it, that we don't make the mistake to spoil the whole industry by just government-backed capital and shying away investors who need a certain return for their cost of capital. And if we don't get this done in the right way, then I think we really face that problem, what we all described here in the last 30 minutes or so.
Mm.
I think there will be government capital coming in, but not necessarily supporting the ships themselves or the owners themselves because of the jurisdictions and the nature of shipping. You probably will have some sort of intervention or support on the end users, facilitating energy transition. And through that, indirectly, you will get support for the ship owner in the transition, and also to the yards. I think that is also tangible. But when it comes to the shipping companies themselves and the vessels themselves, by the nature of the trades and by the nature of where they are incorporated, pretty difficult, I would guess.
Well, we're almost out of time. Any final thoughts from the panel? We have about 2 minutes left. And if you have any last words to toss in before the end of the panel, please, now's the chance.
Well, I was just on that, Christos, isn't it fair to say, I mean, obviously from your perspective, that banks and certain banks in particular are under immense pressure from governments to essentially extol the virtues of a particular risk framework, whether it be, I mean, I'm talking about your bank in particular around regulation of vessel recycling, emissions programs, et cetera, and the risk frameworks and pricing methodologies that go into transaction analysis. I'm
going to have to stop. Unfortunately, we're out of time. I would like to thank each one of you, Shreyas, Evan, Nino, also Christos and Philipp for joining us on this panel. Also like to thank Capital Link and Nicholas and his team. Thank you so much. It's been a real interesting discussion.
Thank you.
Thank you.